Hey everybody, Economic Ninja here. I hope you are doing well. We're going to talk about the Fed being as hawkish as a hawk on stimulants. I'm trying to pick words that I don't get the video kicked out. So yeah, we're going to go over this story. I'm going to link it below. And it's talking about the stock squeeze to the best week since 2020 election as the Fed cranks hawkishness to 11. Why? Because 11 is louder. If you guys know what movie that's from, put it in the comment section below. All right, here we go. With all the stuff going on with Russia and Ukraine and all that stuff in China, accelerating inflation, all that stuff, and Fed tightening are still happening as we exit the week. We present you with this week's U.S. equity market performance. The NASDAQ soared over 8% this week. That's almost 11% off the mid-week lows prior to the Fed's rate hike. Up over 1% each of the last 4 days, up 2% today. The rent of the majors also exploded higher. So things are happening. Short squeeze, everything's great. Why? Because the Fed is raising rates. We want the Fed to raise rates. It brings value to the dollar. And the dollar is crashing. And it's not crashing if you look at the actual percentages. Like, Ninja, I just looked online, man. The Dixie is strong. It's doing good. No, it's actually falling because your stuff is costing more. And it's okay because the Dixie doesn't tell you a lot. It just says the Dixie, compared to all the other crap fiat currencies, it's just doing, it's the best, it's the best smelling turd in the punch bowl. That's really all it is. That's the truth. But in all reality, it's falling too. So it's good that the Fed's raising rates. You raise those rates, Fed. Go a quarter of a point, quarter of a point, quarter of a point. Just keep crushing it. Well, guess what, guys? This is the last time it happened, 2015. The Federal Reserve came out with something called the dot plot plan. Well, they had that also, dot plot plan in 2003. And they said, okay, it's time. We've had low interest rates long enough. We have stemmed the tide from the dot-com bubble, and we have now stemmed the tide from the Great Recession. It's time to hold my drink and watch this. We're going to raise rates, guys. And that's what they say. And it's just super exciting. There's all this pomp and circumstance, and oh my gosh, they're raising rates. We're going to do great. And so the stock market starts to rise. And things are good. And that's what happened in old 2015. Stocks are doing good. Buy stocks, buy stocks. But you know what's weird? After about 4 or 5 of those rate hikes, all of a sudden it starts becoming clear to CEOs and especially CFOs. CFOs are an interesting breed. They're like looking at the numbers and they're going, wait a minute, hold on here. Why'd that cost more this month? Well, prices cost more. Okay. Well, what about that? Why is that costing more? Well, it's because interest rates went up, so the debt's costing more. Okay. All right, well, keep going. They're looking. Another Fed rate hike goes on, another Fed rate hike, couple more earnings reports from companies. And he's like, hey, guys, I think we got a problem here. We're not making as much profit. What do you mean you're not making as much profit? Well, costs are getting more expensive. What do you mean costs are expensive? Well, I've been told, debt's getting more expensive. Products are going up. Well, why would that be? Well, it's because things are getting more expensive because interest rates are going up. And before you know it, companies come out and they go, we got a real problem here. Pretty soon we're not going to be making profit because things are more expensive. And that's when it all starts to fall apart. Like in 2018, the Federal Reserve got the rates up to 2.25%, and all the companies like, lower the rates, lower the rates. And that was it. You know, it's funny. You have taper tantrums, and then you have taper excitement, right? This is different than taper. You have literally interest rates going up. It is going to cost everybody, including corporations, more money to do business. And in a day and age where it is hard enough to get a good employee, let alone any employee, coupled with the fact that you can barely get supplies, it's going to spell doom. So for all the people that go, hey, sweet, we just crushed it, everything's good. Russia's talking to Ukraine. They're figuring out a way to figure out their issues right now. Looks like China's not moving into Taiwan. Cool. And hey, interest rate's doing great, even though, savers are still getting destroyed because their savings account interest rate's not going up. But that's cool too. So the stocks are going up. Guess what? That's only going to last so long. And these are the times that are exciting to watch this stuff happen. So please, guys, tell me in the comments what you think's going to happen with literally the scenario right now that we're playing out. This is absolutely blowing my mind on a daily basis. When you see these short squeezes, and that should tell you something else also. Short squeezes, the amount of shorts in the market where people can come over the top, like Wall Street Bets did, with GameStop and AMC and other stocks, right? They figured out how to come over the top. The problem is that only works out for a certain amount of investors before the end. The last ones in, the last of the last retail investors get completely hammered. They get completely hammered. And it's all fun and games until all of a sudden you figure out, wait a minute, my stock keeps going down. So the point is the wealthy people are getting out of the market. Bill Gates got out of the market a couple weeks ago. It was evident. It was put through in filings, you know. And so these documents were filed. It says he's out, right? Do you think Bill Gates cares that the stock market, the NASDAQ went up 8% this week? No, no, because the day when too many people figured out, you aren't going to be fast enough to sell. And you're going to see people, oh, it's going to be weird because it happens on the outside. You saw when nickel exploded in price and they started capping it, the amount that it could go up each day. And then they said, you can't buy, you can only sell, right? Well, guess what, guys? They're going to do that on the downside too. And it's going to be the retail investor that gets screwed. And I can't put it any other way. They're going to say, you can't sell, you can only buy because the market's collapsing. We got to do something. We got to stabilize the economy. And you're seeing it right now in other countries where they are experiencing crashes, what the governments and central banks will do with your money to stop it. So guys, I hope you got something out of this because I think these are very, very serious times. I'm going to link the article below, and we're going to take this, and Ninja Nation is about to notch this up to 11 because 11 is louder. All right, guys, that being said, the Economic Ninja is out.